Hi there, welcome to Kneppy Invest and welcome to three stocks or companies on the ASX that release interesting or intriguing Appendix 4Cs for the June quarter. Now, I am recording this video on the 11th of August, 2025, intending to release it towards the start or middle of October. So there is a bit of a not a bit, there is a 2 month delay from when I'm recording this video to when I'm releasing. And that 2 month period is going to be really interesting, in particular for one of these companies, because the share price of this company has gone bananas over the last few months. And whether that continues over the next 2 months remains to be seen. And you'll be able to see if the share price of this company has continued to go exponentially higher. I doubt it. I doubt it, but I am a shareholder of that particular company. And that company is Electro Optic Systems. The other two companies I'll be focusing on in this video are XReality Group, which is actually another company I own, and also Airtasker. So what I'm going to do in this video is I'll briefly discuss what these companies do, and then we'll have a look at the Appendix 4C for all three companies, cash receipts, and then also the chart. Okay, so let's start off with looking at Electro Optic Systems. So this company has two main divisions. In fact, I'll just say they have two divisions, defense and space. I'll be honest, I'm a little bit more interested in their space division. That's probably just me. I just like space, that sort of thing. But the reason why the share price of this company has gone a little bit ballistic over the last few months is because of the defense division, particularly when it comes to counter drones. So we're talking about high energy laser weapons, counter drone systems, firepower systems, that sort of thing. And this company did win a pretty big contract in regards to a laser weapon system. I think it was a $125 million contract with an EU nation. Now, another reason why the share price of this company has gone a little bit ballistic, bananas, over the last few months is because of the counter drone systems. And we've seen similar price action with Drone Shield and also Orbital Corporation because they manufacture engines for drones. Now, the division I like in this company is the space division. And we're talking about lasers. Who doesn't like lasers? Anyway, so in fact, you can see on the website right now, there's lasers, there's a laser. Ooh, exciting. So when it comes to the laser division, optical tracking systems, space control, space domain awareness, satellite laser ranging. So they're gaining a bit of momentum in that division as well. Okay, so let's have a look at Electro Optic Systems Appendix 4C for the June quarter. Share price now above $5. It wasn't long ago. Share price was struggling around $1. Okay, so one thing you probably would see when it comes to this company's cash receipts, it can be quite lumpy. So sometimes they get massive contracts and they fulfill those contracts, and then the next quarter they won't generate much receipts, that sort of thing. In fact, we have seen that so far in this current financial year. We've had two quarters. The first quarter they generated 22,000 receipts. This particular quarter, 78 million. Did I say 22,000? 22 million in receipts the first quarter, and then $78 million of receipts in the second quarter. And the first quarter, they're highly operating cash flow negative. This quarter, they're highly operating cash flow positive by 30.5 million. But overall, so far for the year, even though this company has generated $100 million of receipts, they are operating cash flow negative. Now, there is one thing they have done, and you'll notice when you look at the interest and other costs of finance paid, about $15 million in the first quarter of interest and down to $1.4 million in this quarter. So they have really decreased the interest paid. And you'll notice that when we see the debt, they also really repaid their debt down. And yeah, that's the main one. I wouldn't say the main reason, but that's one of the reasons why this company has become operating cash flow positive in a quarter. The other reason is a massive increase in receipts. Okay. Another thing you should note is this company does have a little bit of debt, not a lot. You can also see proceeds from disposal of businesses, 159 million or almost 160 million. So they did sell off, I forget exactly what it was. What was it? I completely forget. But they did sell off one of their divisions and started focusing on those other two divisions, and that did help the financial state of this company as well. Cash on hand currently about 90.3 million, so a lot of cash on hand. And that is actually really helpful because when this company wins a contract, they will need to spend a fair bit of money of fulfilling that contract with product manufacturing operating costs. So it's really helpful that this company does have a fair bit of cash on hand, and they do have a debt, but nowhere near that amount. Well, it's close, $77 million of debt. So this company is actually cash flow, not cash flow. This company has net cash, not net debt. So more cash than debt. Okay, if we have a look at the commentary highlight section, they just talk about customer orders. They do not mention the very big contract they won because that was announced after they released their Appendix 4C. But they're talking about counter drones, RWSs, talking about customer or contract with the US government, a customer, that sort of thing. What else? What else is there here? Yeah, so a fair bit of information here that you could go through if you like what you hear in this particular video. Also talking about operating cash flow, cash flows, borrowing summaries. There we go. All amounts borrowed from WH Solar Patents in 2022 were paid in first quarter 2025, and the company currently has no borrowings. Wait there. Wait there. I did see debt there. Although I'm pretty sure it says there's total financing facilities, 77 million. So maybe this is something else. Okay, so I'd like to have a look at this in a little bit more finer detail. Anyway, so let's have a look at the cash receipts history of Electro Optics. Here it is. So it does go fair way back. Now, I've been a shareholder of this company for actually most of this time. I bought some shares way back just because I liked where this company might be heading. And this company did experience a massive boom period, massive hype period back in 2019. In fact, I'm pretty sure the share price might have more than would have quintupled or something like that. Anyway, I'm pretty sure the share price went from something like $2 up to $10 in 2019. And there was this one really good quarter. Maybe that was a quarter. The last quarter of 2018, calendar year, this company had $141 million of receipts. You can see the lumpiness just by looking at the cash receipts history. But over time, cash receipts have gone up. And the last quarter, the March quarter, 22.7 million was an abnormally low quarter in terms of receipts. But generally, this company does have receipts between, we'll say between 50 and $100 million. That's been true for most of the last 3 years. So the trend here is up. And that's exactly what you want to see, even though there is a bit of lumpiness to their receipts. Okay, now onto the company's chart. And here it is. Here's the chart. In fact, if we'll start off with the weekly chart and we'll get rid of that and that. Actually, no, we'll leave in that. So this is the weekly chart going back to 2015. And so I can't remember exactly when I first bought some shares in this company, but in fact, the share price was in an uptrend at that point. Pretty nice weekly uptrend. In fact, that weekly uptrend maintained up until about 2020, 2021. Now, in 2019, yeah, the share price went from 250 up to 1050. So I did take profits near the top. I still remember selling at $10. And even though I did sell some shares at $10, I maintained a holding in this company, and I've maintained that holding all the way through. I did start trading Electro Optics when the share price fell below $1. I thought there was some value at that point in time. And funny enough, at that point in time, when the share price did fall below $1, a lot of negative press from experts in regards to this company. It was a crap company, that sort of thing. And I think that was a time to really get interested or more interested in this company. They got new management. That was another good thing they did. I do like the new management team. And finally, we saw a bit of action in Electro Optics. In fact, the breakout for this company occurred on the 19th of May. So we only talked about a couple of months ago from when I'm recording this video. And on that particular day, the 19th of May, they did announce a contract win, 19th of May. And let's go back. 19th of May, that was the new Slinger counter drone order for 53 million Australian dollars. And that was really the catalyst for re-rating in this company. All it took was one contract win. And that was a breakout. Not only did the share price break out, we saw some really good volume. And look at the share price, or what the share price has done since then. And then, of course, they released that further contract win. And that was on the 5th of August, $225 million contract win. And the share price rose on that day by 43.4%. Now, the question becomes, is the share price rallying a little bit too much? You can see the really big volume coming in on that contract win, massive volume. I like to see that, massive volume coming in. But the question becomes, is the market getting a little bit ahead of itself? Because this company does have a market cap of almost $1 billion. Yes, almost $1 billion. So it wasn't that long ago where the market cap of this company was less than $200 million. And all the experts were saying this was a crap company. So I'll almost guarantee you those same people are saying this is a great company, great buy. right now. Okay, so that's Electro Optic system. Chart looks amazing. Really good contract wins, a lot of tailwinds in this sort of sector, and yeah, it just remains to be seen what the share price can do over the next 2 months. Okay, the next company I'm going to talk about is XReality Group. This is a company I own, a small company, a fairly small company. So in terms of market cap, we're saying 20, 30 million, maybe 30 million now. Share price did pop up the other day, 33.46 million on a contract win. So this company originally, when it listed on the ASX, was the indoor skydiving company. That's all they had. So I had no interest in this company at that point in time. In fact, they were called Indoor Skydive. I can't remember the T code. They bought something else like a reality. I forget what it was called, but I'm pretty sure they're getting rid of that. Yeah, Freak Entertainment. That's it. So I fly indoor skydiving, and Freak Entertainment, which is their virtual reality entertainment brand. For some reason, I think they're trying to sell that off. I'm pretty sure they're trying to sell, maybe not pretty sure, but I have a feeling they're trying to sell off their consumer leisure division and try to, what's the word? Try to I can't even think of the word right now, but try to concentrate on the enterprise and defense, Operator XR and Red Cartel. So this company is into XReality, that sort of thing. And what's the other one? Alternative reality, or what's it called? AR. I forget what it's exactly called. So anyway, Operator XR is where this company is seeing a little bit of positive momentum right now. So it's all about training military personnel and law enforcement officers in operational tactics. So it's a portable virtual reality environment. Anyway, so they have offices in Sydney and Virginia, USA. So they are expanding overseas, and they launched this in Australia in 2021 and the USA in March 2023. So fairly excited about that. The other one, Red Cartel, I don't know much about that. So I'm more interested in the Operator XR. And they recently did announce a contract with Texas, the Texas government or something like that. That was the 5.71 million state of Texas contract for Operator XR. So that is where I think this company should be concentrating all their efforts on, with maybe being a little bit unfair on Red Cartel. Okay, so let's have a look at this company's Appendix 4C. There's another reason I actually like this company, and it comes back to this. And the very fact is, this company is operating cash flow positive and free cash flow positive, and they've been doing this for a while now. So receipts, 17.7 million. Operating cash flow positive for the quarter, 1.3 million. For the year, 3.1 million. Now, they're not free cash flow positive if, the big if you do what I do and say that intellectual property, which is capitalized research and development, should be included in the free cash flow calculations. Now, technically, it's not. Technically, free cash flow is just operating cash flow minus capital expenditure, which is property, plant, and equipment. But I like to change that and include intellectual property because it's an ongoing cost. It is an ongoing cost. And for the year, 3.8 million. So not free cash flow positive for the year, but they were for the quarter. I do like they put negatives here. One of the only companies that does that. When it's a sort of a negative, like a spending, they put negative, which is here not common. Otherwise, they did a couple raising, and they do have $3.5 million of cash on hand and a little bit of debt, $4.9 million of debt. I'd like to see that to be zero, if I had to be honest with you. Anyway, let's have a look at the highlights section. So in the highlights section, they're just talking about the financial performance. So it's talking about cash or strong quarter for cash receipts and new sales of Operator XR. Keep on talking about cash receipts. They do break it down. Operator XR cash receipts of 2.5 million and entertainment of 2.2 million. And I would assume that the margins in Operator XR are higher than entertainment. Now, I could be a little bit wrong there, but I think that's another reason why they might or should concentrate on that particular division. What else do we have here? That's about it. Oh, they actually do break down the receipts into iFly, Freak, Operator, and other. And yeah, the cash receipts in Operator have really boomed in the last 5 or 6 quarters. iFly, no growth there. And I don't think there's any growth in Freak. So all the growth in this company over the last few years has been through their Operator XR division or business. Operating cash flow, here we go. This is something I don't track. I only track receipts, but this company has been operating cash flow positive 4 of the last 5 quarters. And in fact, they've also looked at the whole year. So this company has increased the operating cash flow in the past year. Talking about operating performance metrics and positive outlook into financial year 26. I haven't seen anything about them offloading Freak and iFly, but I think if I remember somewhere, they did mention that. So maybe it was just, they were just mentioning it. There's a chance they might offload that. Augmented reality, that's what it is. VR is virtual reality. AR is augmented reality, not alternative reality. I don't know. Anyway, so that's XRG. Now let's have a look at the cash receipts history. If I can find it. XRG, very easy T code to remember. Most of X's in T codes are towards the end, like Telix and Wellnex and DXN is in the middle. Anyway, so let's have a look at XRG reality. So cash receipts go back to 2020. So, and we see exactly what I want to see here when it comes to cash receipts. Cash receipts have been growing through time. There is a chance that I have left out the cash receipts for when this company just had iFly because they were known as indoor skydiving. Like a ticker like IDR, and then I'm not sure if they bought XR operator, whatever it's called. I'm not sure if they bought that or if they develop it. That's actually something I should actually research. So receipts have been growing through time. Exactly what you want to see. A little bit of lumpiness there, but not too great. So everything moving in the right direction for XRG, right? And the company is not that expensive either. Now onto the chart for the company. XRG. And you'll see the share price has popped up in the last few days, yeah, on the back of that contract win. Now, before that, the share price was drifting lower. So even though the company is financially performing quite well, there's at this point in time not a lot of interest in this company. So maybe this particular contract win will lead to a little bit more interest. And in the past, when we have seen a little bit of interest coming in, we've seen a lot of selling, which is sort of understandable because if we go back and have a look at the weekly chart, no, we haven't seen the share price, drop a lot. So, in fact, the share price rallied significantly back in November 2021. But really, the share price or the chart, I have a feeling when you see the share price drop a lot back in or between 2015 and 18, I'm pretty sure that was just indoor skydiving. Then they made it sort of a transition. That must have been 2020, 2021. And since then, share price really going sideways. This has the potential to be a breakout candidate, particularly if they continue to improve their financial performance, increasing cash receipts, becoming more and more operating cash flow positive and free cash flow positive. This definitely has this is definitely a candidate for a breakout, particularly because of the sector they're in. I thought this company would generate a little bit more interest. XReality sounds exciting. Okay, so that's XReality Group. Now onto Airtasker. What's the best way to say Airtasker? It's a online platform to get how's your daily chores done. So you call someone via Airtasker, and they come around to paint your house or to mow your lawn or to fix your television or something like that. How it works. Post a task, get offers, get it done. So if you need someone to clean your tabletop, maybe this is the place to go. My one little issue with this is if you need, say, someone to clean your top, you go through Airtasker, but when they come around, they might have a business card and then they give you the business card. And from then on, you don't go through Airtasker, you go through the person. So that's probably why my one issue with Airtasker, how much longevity is there when it comes to individual people? I don't know. Maybe I'm being a little bit unfair on the company. Okay, so let's have a look at Airtasker's Appendix 4C. Now, before that, how big is this company? I'm going to guess 100 to 200 million. I actually don't know. $165.91 million. So let's have a look at this company. Now, this company has been around for at least about 4 years. A lot of interest in this company initially. That interest has died away a little bit. This company has been operating cash flow positive quite often, if I remember correctly. I could be mistaken. So this company does generally release pretty good Appendix 4Cs just by looking at their cash flow. And in fact, if you have a look at this particular quarter, almost $15 million in receipts, operating cash flow positive 1.7 million. And for the year, they were operating cash flow positive by $4.4 million on $58 million of receipts. Even if you take into account intellectual property and capital expenditure, they are also cash flow positive. In fact, for the year, cash flow positive by about $2.3 million. So there's that. That also should mean the cash on hand has been increasing. It's up to $18.5 million. I'd be massively shocked if they had any debt. A little bit of debt, $43.4 million of debt. Maybe the reason they're in debt is because they made some acquisitions. Yeah, who knows? Anyway, so a little bit of debt there for Airtasker. If we have a look at their highlights, just see what they're really highlighting to the market here. Talking about 4-year positive free cash flow. Yes, I probably would have done that too. Airtasker marketplace revenue growth 29%. So some nice growth there. 29% for Airtasker marketplace. UK growth of 105%. And US GMV ARR growth of 755%. And other highlights, yeah. They also have a nice little free cash flow graph. So over the last 2-3 years, they have turned it around a little bit when it comes to free cash flow. Revenue has been growing nicely. Yeah, so it seems like things are still moving in the right direction for this company. Just how much growth is there going to be? They've also EBITDA positive on a quarterly basis since the middle of 2023. Okay, so let's have a look at the cash receipts history of this particular company. Actually, before I do that, I know, no, we can go there. So let's have a look at the cash receipts history of this company. Ticker code is ART, which is sort of annoying because there is a lot of, when I'll do my spreadsheet here, I do a lot of quarters. So I'd have these little tables here with quarter and receipts, and ART is in the name quarter. So sometimes when I do find ART or Airtasker, it goes to the quarter, not to the company itself. But today it went straight to Airtasker. So this is the cash receipts history for Airtasker, and this is exactly what I want to see. So even though I've been sort of poo-pooing this company and the potential in this company, the cash receipts have been growing through time. Now, the cash receipts in the last 3 quarters have stabilized, going flat. Does not mean cash receipts have stopped growing. We have seen this in the past where cash receipts find a bit of a plateau for a little bit and then start growing again, find a plateau, start growing again. So that could be what's happening with Airtasker right now. But the main thing is they are free cash flow positive, and that means unless they do a major acquisition, they don't have to go back to the market for any more cash in terms of a capital raising. And I totally forgot to look at the chart for Airtasker. In fact, I remembered when I started recording the next video. Anyway, so this is the weekly chart for Airtasker. So there was a fair bit of interest in this company when they listed in 2021. In fact, in that first week, the share price popped up to almost $2. Then it fell away as interest rates started to rise. It has found a bit of a base, I think, going sideways over the past few years. But as we turn attention to the daily chart, we haven't seen, if it happens here, we haven't seen as much interest, but the share price did pop up when they did release their Appendix 4C. So in the short term, the chart actually does look fairly good. So this could be a bit of a breakout for Airtasker. And you can confirm that when you're watching this video, because we'll have 2 months of price action for this particular company. So in fact, in the short term, the chart doesn't look half bad. Okay, so that's it for this particular look at 3 companies that release interesting Appendix 4Cs for the June quarter. Electro Optic Systems, XReality Group, and also Airtasker. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.